All right, I think I'm live. I've gotten a lot of questions concerning this, a lot of interest in it, and so I thought I'd do a quick walkthrough. This is the 1099-C, better known as discharged debt. This happens when you owe, let's say, maybe a car loan that you've defaulted on, and the loan company or the dealership will issue a 1099-C for that discharged debt, which turns into taxable income for the receiver. Um, there's also persons wanting to file this for themselves as well. And so today I'm going to walk through exactly how to do that, who can file, and why. First thing I want to mention here is that well, let's just go through it real quick. We'll go from there. All right. So first things first, the reason for the 1099-C again is the discharge debt. The first thing I want to bring your attention to is that this is any person within the meaning of Section 7701 A1 that has at least $600 during the year in discharge debt. Okay, so what that means is that if you have discharged any debt, right, to any person of at least $600, then you are required to file this form. But what we need to talk about is who is this person that they are speaking of. And so the person is actually an entity. Okay, the entity is any corporation, estate, trust, association, company, partnership, or similar organization, or a group of persons who have a formal or informal understanding among themselves to make a coordinated acquisition of stock. They're talking about investment clubs. That's what they're talking about there. A principal element in determining if such an understanding exists is whether the investment decision of each male. Okay, so they're still talking about investment clubs. Okay, and then they talk about the fact that the participation of the creditors simply by formulating a plan for insolvency, dealing with bankruptcy, does not make them an entity. So that's what you see down here at the end. It says basically what happens is when you are in bankruptcy, all of your creditors will get together sometimes and they'll discuss, okay, well, how do we liquidate these assets? How do we structure a repayment plan, right? And so what this is simply saying is that if those persons come together for the purpose of doing so, that does not make them an entity. Okay, and the reason why is because remember up here at the top, they talked about exactly what that entity involves, right? And it has to be either a corporation, a state, trust, association, company, partnership, or similar organization. All right. So what that means is if you are someone that's wanting to issue this 1099-C to someone or some company, you will yourself need to be one of these entities. That's required. I'm sorry. Let me say that it's required if you're one of these entities that you file this 1099-C. Okay, it is possible to do so without being one of these entities. However, it is in writing, right, that you need to be one of these entities. And so my advice is always to approach it from that angle. Reason being is because if the person that you filed this 1099 against were to fight this or argue this, that'll be a really easy thing to say that, this person is not even an entity. So how can they issue this 1099-C to me, right? So that's why it's important that you want to have something as simple as a partnership that can be very easily set up. Doesn't cost anything. All you need is an EIN number to make it happen. Same thing goes with a trust or an association. Those things don't cost any money, and you can quickly form those in order to do this kind of stuff. All right. Next thing I want to talk about, let's go back here to this form. So the creditor's information is going to go here on the top, okay? And one of the things that I wanted to point out is the importance of having a phone number there. And we'll go into a little more of why that's important. But again, here in writing, what's required is a name, address, the taxpayer identification number, okay, which is the person that's filing this 1099-C form. And of course, the date of the identifiable event, okay, and we'll go over that here in a second. Of course, you'll need to know the amount of the debt. So again, name, address, and what's really important is the phone number, okay? So in this first box, name, address, phone number. It's really important. You have to have the information there. All right. The creditor is going to be you, the person filing the 1099, and then the debtor's information will be here. We'll go over that as well in a bit. The date of the identifiable event, we'll go over that. That needs to be there, and then the amount of the discharged amount. Okay. So let's talk a little bit about what some of those things mean. Now, have to go back and forth here, but I think it'll all make sense. All right, so again, identifiable event. This is important too. So let's say whoever this person is or who this entity is that you're filing this 1099-C against, there is no requirement if there's two discharges of $300 to equal 600, right? So it has to be one incident of $600 or more in order for this to be required, okay? So you want to make sure, again, that if you're doing this, that the amount is above $600. Otherwise, it'll be looked at as, well, this is not required to file. Why'd you file it, right? Okay. Yeah, something else important to mention here is the due date, right? You have to get this filed by March 31 of the tax year that this happened in, right? So let's say you discharge debt on, December 2020, right? The due date for filing this 1090-C is going to be March 31. And I'll show you a really easy way to file this online on your own. All right, if this is discharged in bankruptcy, you're not going to issue a 1099-C. I think that goes without saying. All right, so these are the identifiable events, okay? So one of these has to happen, and it must be listed here in box 6, the identifiable event code, as well as the date of the identifiable event. All right, it's going to be pretty simple, pretty straightforward. I'm not going to go over all of these, only the things that are, most used, right? So, go down. Again, we're talking about, if this is happening in bankruptcy, you're not going to use this thing. Here we go. So a discharge of indebtedness pursuant to an agreement between an applicable entity and a debtor to discharge indebtedness at less than full consideration. So what that means is, let's say someone owes you $5,000 and you decide to say, okay, well, you know what, I'll forgive, the debt and issue a 1099-C for $4,000. Right? You can do that, and that will be an identifiable event. There's also the discharge of indebtedness pursuant to a decision by the creditor or the application of a defined policy of the creditor to discontinue collection activity and discharge debt. This is the one that's most used, right? And the reason why is because what this says is that if you, the creditor, right, have a written policy, and again, it has to be a written policy that says that, you know what, if this person doesn't pay after a year, I'm just going to forgive the debt. Okay. Now, this written policy it will not come up unless asked for by the IRS in the case of someone fighting this 1099-C, right? In that case, you will have to provide, like I said, a written policy that simply says that, if this person doesn't pay after a year, then, I'm going to forgive the debt and issue this 1099-C. The statute of limitations, you know, again, this is going to vary state to state, and a lot of times this is going to be depending on some sort of contract that you will have had with the debtor. So really no need to talk about that because I can kind of get blurry. All right, and so this kind of goes into exactly what I was saying before. So reporting is required under this section in the case of discharge of indebtedness and bankruptcy only if the creditor knows from information included in the reporting entity's books and records pertaining to the indebtedness that the debt was incurred for business or investment purposes. All right, so let's talk about that for a second. Um, Typically, the debt that is being forgiven will not be for business purposes or for investment purposes. Typically, it's going to be for personal purposes. So if you just give someone a cash loan, that's going to be personal, right? If you were to give a business loan, right? And I'm saying business loan, but what I mean by that is this person is conducting business and you know that the money that you're giving this business is going to be used for business, okay? In that case, it's a whole different thing, right? But in most cases, the 1099-C is going to be issued to a company or a person for personal debt. Let's talk about that. All right. Again, yeah, indebtedness is considered incurred for business purposes if it's incurred in connection with the conduct or trade of any business. We're not going to talk about foreign individuals. It's really no need. If they're a foreigner, you don't need to issue this 1099. Doesn't mean that you can't, but it's not required. This is really important. This kind of goes back to a video that I've done before concerning bad debt expense, right? In a lot of situations, that's what I run into, are persons that are giving money or loaning money to family members or friends, someone that they're maybe related to. And in those cases, the 1099-C is not required. And that's really important because when you're filing that bad debt expense on your personal tax return, it's important to understand that you are not required to issue a 1099-C to the persons that you are forgiving the debt for. This is also important. I just recently heard from a client, she said that she gave money to her son and his girlfriend to the tune of almost $20,000. And so what this thing here says is that if there are more than one debtor, right? If you're talking about two people, both persons are responsible for the debt. And so the 1099 is going to be issued to both people, basically, right? It says that only one return of information is required under this section if the reporting entity knows or has reason to know that co-obligors were husband and wife, right? So if they're husband and wife, then you can issue just one 1099-C. But if they're not married, then you will issue two 1099-Cs to these persons. Now, the question becomes, why would you want to ever issue a 1099-C to your son or your daughter or whatever? Well, this just really goes back to CYA, keeping a paper trail, right? When you are reporting items on your tax return, when the IRS asks for proof, when you have a filed 1099, that is your proof. This is something that's so important, and I talk about this all the time. If you pay someone more than $600, if you file a 1099 and you report it and say, hey, I paid this person $600, that is your proof of payment, period. Now, that's That's when you're talking about your tax return. Now, if the person fights the 1099 and says, hey, this person never paid me $600, that's a different story. Well, now you have to prove like receipts or something like that, right? But if you're talking about just an audit of your personal tax return, when there is a line item that says $600 paid to so-and-so, where's your proof, sir? This 1099 that I filed, that's my proof that I paid the $600. And so, in a lot of situations, filing that 1099 is really, again, just CYA, just having something to say that, hey, yes, in fact, this was done, and so there's no need to ask me about it, right? And this is important too. So you see here the amount of debt discharge required to be reported is the total amount of indebtedness charged. Okay, and so what that means is that, again, if you're talking about, girlfriend, boyfriend, whatever, then you're going to issue two 1099-Cs, and the total amount discharged is going to be on both of those 1099-Cs. They're both jointly responsible for this debt. It does not matter if they're married. And I think that was all on this one. All right. I want to talk about this. So I discussed the debtor's 10, right? The debtor's Social Security number. Again, I've had these conversations again concerning the bad debt expense and how that's supposed to be reported and what information you need to report that information. And so, what I always tell people is that you want to get as much information as you can, but that's not always possible. All right. And so what I mean by that is that if a good friend of mine comes and says, hey, I'm having a hard time, can you help me out with $500 or $1,000, right? I may not tell my friend, hey, you know what? I don't mind helping you, but if you can please sign this W-9, I greatly appreciate it, right? I may not do that because I may not foresee having to file this 1099-C for the bad debt at the time that I made the loan. So what the IRS has done is they have come up with basically some rules concerning your reporting requirements and what you are required to do as far as getting the information from the debtor. Okay? Because, again, if you are an entity, and I'll go over I just noticed that I missed one important piece here. If you're required, remember, most people are not going to be required to file this, but if you're required to file this and you don't file it, then there is a penalty for not doing so. And so what you want to do is make sure that you have your I's dotted and T's crossed so that you don't have to pay that penalty if in case you cannot get the necessary information in order to properly report this 1099-C. Okay, so I'll go back and talk about who's required to file this. But again, most people are not required to file this. It doesn't mean that you can't file it. It just means that you're not required to. Okay, so reasonable cause. Okay, this is throughout the Title 26 codes. Reasonable cause, reasonable cause. It's just a reasonable person. Did you make an attempt to try to get this person's information? Okay. Or was this just due to willful neglect? And willful neglect means that you just didn't even try. You didn't think about it. You didn't want to do it. And that's going to be, it's going to be, what's the word I'm looking for? It's going to be apparent based on, kind of what you did, right, surrounding this whole thing. So let's talk about what reasonable cause means and what's required here. So again, want to make sure that you acted in a responsible manner, right? All of these indirect terms, but it is important, okay? Gone. And what you're seeing here, just so you know, is I'm skipping through this stuff, but this is all about your tax history, and that is something that's important to note when I do meet with a new client, especially. That's one of my first questions is, what is your tax history like? Have you been audited before? What type of penalties have been assessed to you before, right? Because that kind of stuff is going to come into play when you have these penalties and stuff later down the line, and that's what these paragraphs are discussing. If you've had these penalties before and you have them again, it's probably willful neglect, right? But if you've been filing these things and you haven't had any problems, you've been doing it on time, and now all of a sudden you just have this one penalty, well, that's a different story, right? And we can argue that the person acted, within reasonable cause. Undue economic hardship is always an issue. Remember that filing your taxes is voluntary, right? And it does cost money, time, and effort to do so. And sometimes what's necessary to file costs more than the benefit in doing so. I can't come up with a good scenario for that right now, especially being that we're talking about, $600. But I mean, let's just imagine that you already have, let's say you don't have a return to file at all. Yeah, let's just say that. Let's say you don't have a return to file at all. Let's say you don't have any taxable income at all. And, filing this 1099-C for a bad debt expense is not going to give you any tax benefit. So what's the point in doing it? But for you to do all the reporting, for you to go about finding this person's information, for you to actually figure out a way to file this thing, right? May cost you more time and money than what it's worth. And IRS understands that, and you can always argue that. Again, only if you're required to file this. But I do want to get to the important part of this concerning I had this queued up and then I went all the way back to the top. Okay, here we go. All right, so this is what I want to get to because this is important. So missing 10. So remember, we're talking about the debtor's 10, right? This is important, especially if you are filing this for a company, okay? So let's say you're dealing with a utility company, or let's say you're dealing with, I don't know, a car dealership. You may not know their EIN number, and you may not be able to get it easily, right? But you are supposed to try, okay? And that's what we're talking about here. All right, so what you're required to do, and keep in mind, if you are giving these people a loan, right, the idea is that they're going to pay you interest. And when they pay you interest, you are supposed to report that interest on your tax return. And so you are supposed to have this person's tax ID number so that you can file your taxes and say, this is the tax ID number that paid me this interest. If you've ever received a 1099 INT, where you've received interest, then you know that that 1099 INT has both your tax identification number on it and the payor's tax identification number on it. So the idea is if you're extending a loan, again, a loan means they're paying you back with interest, meaning you expect to receive interest, meaning you expect to file a tax return with interest on it, meaning you have to have a tax identification number from the person that's paying you interest. Okay? So again, it's really important because if you plan on filing this 1099-C, why don't you have this person's tax identification number? Because you expect it to put it on your tax return, right? When they paid you interest, right? Okay. But like I said before, it happens. Sometimes you can't get it. Sometimes you don't have it. And so you are required, though, to do some things. And this is where it starts. So the initial solicitation. All right, you have to solicit the person's tax identification number at the time that the account is opened. And the account opening is whenever the loan is issued. All right, it's really that simple. It doesn't mean that you have to get it at that time. It just means that you have to ask for it. Okay, and we'll talk about how you ask for it here in a moment. All right. First annual solicitation, because remember, you're going to file taxes at least annually, right? So once a year, you are to reach out to your interest payors and say, hey, I need your tax identification number so that I can file taxes. Please send it to me, whether it be a W-9 or what have you. So that's the first annual solicitation. All right, if you still don't have the tax ID number, right? If they still haven't sent it to you, because this does happen, right? Then you have the second annual solicitation, because again, you're expecting to receive interest on this loan. All right. Now, what happens if you don't get the tax identification number on the second year? Okay. What the IRS says is that you are allowed. Let's see if I can find it. Okay, here we go. If you did not solicit the first year, right? If you did not solicit the second year, then you can do what's called make-up solicitations. Okay, and what that means is that you can solicit 2 consecutive solicitations in 1 year, basically. Just have to ask for this thing twice, basically, and that'll satisfy the reasonable cause for not having that tax identification number. And now I'm looking for how to solicit. Okay, here we go. So you can solicit by mail. All right, and what that means is that your proof will be basically a certified letter sent to the company, right? And you'll have a return receipt, meaning that the person received it, they signed for it, and they sent you back a return receipt that says that they received it. Or you'll at least have a receipt from the post office saying that, hey, I mailed this to them, right? A letter. Okay, this is just a formal letter that's written to the payor that says, hey, you must send me your tax identification number or you'll be subject to a $50 penalty by the IRS. You can also send in a W-9 and say, hey, I'm sending you this W-9, please sign it and send it back. And I'll tell you, working in corporate accounting, this is the most common way that it's done. Typically, I would show up to work, I would open up my email, and there will be a bunch of W-9 requests in there. And then my job would be to fill out the W-9 and send it back to the vendors or customers or whatever it is with the company's information on it because they need that W-9 in order to 1099 us, right? All right. And then a return envelope for the payee to provide the 10. And you can also make this by phone. To be very honest with you, phone records has never come up in an audit that I've been a part of. But I imagine that will be your proof, will be phone records to say, hey, I contacted this person at this number, and asked them for the tax identification number, and they just did not send it to me. Okay, and that kind of goes back to the original point I made here in the very first box, which is providing your phone number. Because remember, when you send this 1099, the debtor has to have the ability to contact you to talk to you about this debt. And again, that's why the phone number is so important. There must be communication. There must be some avenue, some mode in which to communicate, both you to them and them to you. Okay, that's going to be especially important if you don't have their tax identification number. So with all that said, you do not have to have the tax identification number, but you are required to show proof that you at least asked for it. Okay, and they have very specific things that you must do to show proof that you did ask for it. The account number is not important unless you are filing multiple 1099s for this one debtor. Okay. We didn't talk about the interest, but that was in there. If part of the debt is interest that you're forgiving, you can also enter it there. The debt description, it could be just as simple as a loan or whatever it may be. And then you also want to make sure that you check this box to say that they're liable for the repayment of the debt. Because if they're not liable for the repayment of the debt, then you cannot issue this 1099-C. And then the fair market value of the property, that's going to depend on exactly, what this is. 9 times out of 10, we're talking about cash, but it could also be a loan of a vehicle. It could also be, it can also be a loan for cash for purchase of a vehicle, right? If you know that that's exactly what they're going to buy with the cash that you're giving them, then you now have an interest in that vehicle. Again, depends on the contract, and so I don't want to go into all that stuff, but that's what you have there. All right, moving on. I want to talk about the 982. All right, now the 982 is the form that you file when you receive a 1099-C and you do not want to pay the tax on that 1099-C. You file a 982 to basically, get rid of the debt. And so it's a very simple, straightforward thing. It's only a couple lines needed. There is a worksheet that goes along with this. I'm not going to go into that worksheet because, number one, it's not required. Number two, again, it's very straightforward. I will talk about it, but I'm not going to pull it up here. So number one, if you are filing this 982, what you want to do is you want to use the second box. That's simple. Okay, this is a discharge of deadness due to the extent insolvent. All right, because again, if this is a bankruptcy, 9 times out of 10, you don't have to worry about this because it's been handled by the trustee and there's no discharge of debt. Right, it's been handled in bankruptcy. All right. It is possible that this is concerning, investment property, right? But 9 times out of 10, we're dealing with the with box B here. All right. This one's important to talk about. Number E. If this is due to a principal residence, again, you're not going to receive a 1099-C because if this is due to a principal residence, you're going to receive a 1099-A, which is not taxed. It's not taxable income, and so you don't even need to report it. So there will be no need to file a 982 or select this option. I have seen in the past that persons receive 1099 A's for timeshares, and Timeshares, of course, are not a principal residence. And so in that case, you may have to use the real property option here on the 982. But again, in most cases, it's going to be box B. All right. The boxes down here at the bottom, the reason for this is because if you have any carryover credits, all right, you will have to reduce those carryover credits before you can reduce the 1099-C amount. So let me explain, all right? One of the easiest here is line 9, okay? So it says, apply to reduce any net capital loss for the tax year of the discharge, including any capital loss carryovers to the tax year of the discharge. So let's say you have a bad debt expense, a $3,000 capital loss, okay? Well, what's going to happen is that let's say you have a 1099-C for, let's just say $3,000, okay? If you wanted to discharge that 1099-C and not have to pay any taxes on it, you're going to have to wipe away your $3,000 capital loss, okay, before you can reduce the 1099-C. You have to first reduce these credits, okay? Now, these credits are not reduced dollar for dollar. These credits are reduced 33% of the total amount, and I didn't queue that up. I'll see if I can pull it up real quick for you. But these credits are now reduced dollar for dollar. So if you have a $3,000 capital loss, 33% of that capital loss is going to be reduced for every dollar of your 1099-C. So instead of removing the $3,000 capital loss, you remove $1,000 of it. Okay, so you'll still have a $2,000 capital loss, and you'll have getting this mixed up in my head. You have you'll have a $2,000 capital loss, and you will have to, and you'll have to have $1,000. No, wait. Oh, shoot. You reduce your capital loss by a third. Okay, so you have a $2,000 capital loss, and then the 1099-C, you're going to reduce that by, $3,000. I may be wrong about that. And I'll pull it up so we can go over it real quick. But anyway, but these are all the credits that you have to reduce first before you reduce that 1099-C. So let me pull this up because I did have this queued up. All right, so, there we go. Ordering rule. I gotta blow this up. And I lost my place. No. As basis, we could talk about that too. If you do have, wait, it's line 10. Oh, it skipped on me. There we go. If you have a general business credit carryover, you reduce the carryover by, a third, right? For each dollar excluded from gross income. Okay, so if you, exactly. So if you reduce your 1099-C by $3,000, then you have to reduce your credit by a third. So you would still have a $2,000 capital loss, but you won't pay any taxes on the $3,000 1099-C. I said that right. Okay. Just wanted to make sure. Let's see here. All right. I did touch on that just a little bit. Again, doesn't happen very often, but if there is some property that is that's involved with this particular discharge of debt, you will actually reduce the basis of that property. So again, if you're talking about, a $3,000 1099-C, and let's say the property, whether it's a vehicle or whatever it is worth $5,000, well, now all of a sudden on your books, that vehicle is now worth $2,000. And again, this is only if it is business related, okay? Because that's the only time that, property is going to be on a balance sheet to even have a basis reduced. So, all right. I think that's it. I think I covered everything. We talked about the identifiable event. Of course, I put all the links in the description. I want to make sure I didn't miss anything. Phone number is important. Don't have to have the tax identification number, but you do have to ask for it. You want to make sure that you have proof of that you asked for it. And yeah, that's it. I think we did pretty good. All right. From me to you.